This is Eric Muathe from Muathe.com with another quick educational video. In this video, we're going to be taking a look at the small time frame. We're going to take a look at the Canadian market and also touch a little bit on how Apple is shaping up as far as the 2-hourly time frame is concerned. For those of you who like to continue researching and understanding how to play the market from a small time frame point of view. All right, so here we can see on Monday, 2 days ago, we had a relatively, okay drop. Not too big, but it was a sizable drop. Not too big because the market was not even down 1%. But you can see we had a drift here, a gap down on Monday. But ever since that drop, the market has had 2 straight days. So this is now 2 days later, and we can see the market has had a nice response here. And I just want to show you from a RSI perspective how this has played out. Now, of course, one can say that this is hindsight, but I guarantee you this happens all the time once you start identifying that it is actually taking place. So here we see on the daily chart, the reason maybe we can attribute to the market bounce is this RSI lows line. Very simple. We came and tagged that line, we stopped, and now we are going up. So that's the daily. How that happens is tough to understand, but that's how the market plays out. On the 2-hourly, the same thing. RSI lows line. At the lows of Friday's trade, the market hit that level, and since then we've recovered. It's another way of saying that if you are a small time frame trader and you see the market hit support there, then you can position yourself accordingly, anticipating that the next swing trade is going to be with a bias to the upside, which is what happened. Now that the market has had those 2 up days, if I was going to extend this thinking, if you're a short-term trader, you might want to consider this backtest line as far as the Canadian market is concerned. Right here, because it is coming back to this level where there was a break as of Monday's open, and now the RSI is showing resistance. So if you already took that entry trade with the support line here, previous support line, and the previous support line is this line, if you took that trade, now you might want to consider the opposite, because the RSI is telling you it's running out of momentum as of right now, right here. Now, keep in mind this gets a little bit tricky, because if the market actually goes on and moves above the blue line, then actually it's going to clear this level and advance higher. So either we are going to get continued resistance and a pullback hour to hour based on this blue line of resistance, or the market clears that level and moves higher. Hope that makes sense. In other words, let's do this. Let's explain this. So this is the line, and what I'm saying is the market has come all the way back and is showing signs of resistance on this line. So as long as that's the case, then you can conclude that it's time to take the other position, which is either get out of your longs in the short term or expect a move lower for a swing trade lower, with the understanding that if the RSI moves above this line, then actually that movement in itself, by itself, is an entry to the upside for a swing trade higher. And of course, this blue line I'm drawing here is actually this line here. Hope that makes sense. Now we can see the same thing. Take a look at Apple. From the same understanding, if we take a look at this line here, you'll notice that it is also showing the same look. So if you're trading Apple from a small time frame, if this resistance continues, then you can anticipate that the market is setting the stage for an hour-to-hour short-term swing trade to the downside. And that if the market clears that blue line, then you can anticipate movement to the upside. Now, of course, if you're new to this, it does need some study, but that's how you can use the RSI to trade the small time frame. Also, this could also be RSI uniformity for those of you who are aware of that method, my own research method. That could also be a line of uniformity as far as Apple is concerned. And oh yeah, there's also obviously negative divergence. So this is an inflection point. All those resistance points might suggest that the next swing trade is pointing to a move lower, or we clear all these levels and the market has an opportunity of advancing beyond the current price highs. Eric Muathe, Mathod.com. As always, good luck, peace, and blessings. ESPXS.